Okay, this is just a real quick breakdown of how to use time to trade. So you would go to timetotrade.eu, you'd log in, and you would click, or you would type in Euro US dollar here. You'd pull up the chart. You'd want to save your settings, which are a 1 week, 1 hour stochastic chart based on 20K, 10 smoothing period, and 20D. Okay, I also have this 514 EMA down here, but don't worry about that. So to set an alert, you would look for these two buttons right here, because we're looking, all we care about is what the K is doing in relation to the D line, and we want to know every time the K goes down through D, and we want to know every time K comes up through D. So to set the K down through D, so a short position, okay, would be to click this double arrow right here, which I have set already, and every time the K rises up through there, you'd want to know that, you click that button. And it's just that easy. And then, like I said, they send you emails, and they look like this, which are really cool, and they have all your information on what you need. So that's that. Okay, the next thing I'm going to talk about is this risk management calculator that I built. First of all, it's important to know and understand risk. It's you got to have that. If you're not afraid, then you're not going to trade well. So for right now, we're going to do this as if we had a $2,000 balance in our account, and for only this level of money would we automatically use this level, this many pips as our stop loss. And what that means is, say it's 120 pips stop loss. So you're guaranteed you're going to lose you're guaranteed you're going to lose $1,200 of your 2,000 balance if this line is hit. Now, the reason I pick 120, and it's based on a calculation of 10% of the percentage of money that you're risking and your percentage of risk allowed. The reason I come up with 120 is because I feel that that is a absolute rarity where we get a solid signal where both the chart and the candle, both the charts and both indicators signal a short, and it goes against us. Okay, and I mean, this is the best example I can show you of how the stop loss system works. And what I'm going to do is I'm going to say, I remember we already did this one, but here's our entry at 6 a.m. and it's at the 4170 level. And as you can see, it was a great short. We would have made tons of money on it, but there's this huge wick here where this candle just completely raged against the trend, or the upcoming trend, and tried to fight its way out of it. And if you set your stop loss too close, like here at a recent high, or even here at a very conservative recent high, or the only way you would have been safe is if you would have the foresight and knowledge, which you wouldn't have had, to look way back here amongst all this chop and pick the highest wick you could see recently. But that's too far back, usually only like a couple of days. So I'm going to show you why this works. I'm going to draw a line so I can move it around, and I'm going to call this is my stop line. Okay, and this is a visual that I would actually set in once I set my order, but for the purposes of this, I'm just going to use it so I can move it around. So we'll call, let's just say 4170. So I'd set my exit at 4270, or my absolute stop loss, right? At 4270 would give me 100 pips, and then 4290 would give me 120. So we'll call that was our stop loss when we entered this trade. So this is what it would look like. I'm in on this candle on a stochastic cross, check above 50, check going down, good. Percentage of ours above 50, check. And like I said, this candle would not have done this yet. This is it would not have been this far down at the time. It would have been right around here, the 40 level. So we're in, and I automatically set my stop loss for 120 pips against me. So as soon as I'm in this trade, I'm guaranteeing to lose $1,200 if it goes against me, which is okay because I don't want to lose my entire account. If I'm going to lose money, that's fine. I just don't want to lose the entire account. And I mean, even in a rare situation like this, I would have been okay. So you don't see this very much at all. So this is a total rarity, and it worked fine. And there's that huge spike that would have tried to take us out, and we made a bunch of money on this. It just kept going down. So that's how you use this number. So every time you put in a trade based on how much you're risking, and what size lot you're using, which it tells you right here, I can trade one 100K lot or $10 a pip. because I'm risking 25% of my account balance, which is $500 a trade. Then you look over here and you say I'm risking $500 a trade, and that means I can get a $100,000 lot, which means the pips are worth $10, and yada yada yada. So then just moving on, it just kind of goes down. So basically it shows you that when you have a $100,000 account, that will give you the ability to trade to risk $25,000 per trade, okay, and you will be trading for $500 a pip. Now the beauty of this is you're willing to risk 2,490 pips against you, okay, which means you're guaranteed basically to lose 25 grand. So you're risking, it's a 1-for-1. You're risking 25 grand to make 25 grand. I think that's a very fair, very legitimate thing, and I can guarantee you that in not even in maybe 2 or 3 months of trading would you ever look at taking a 2490 pip loss. There's no way you're going to lose 2,000 pips, even in a 2-month-long trade. And you can, I'll just zoom it out here real quick, and you can see that there is hardly any I mean, like, this is, consider this move a massive move right here, okay? From 527 all the way up to the peak at, let's see, June 3rd. Okay, so 43.24 minus 38, 43.24, 43.24 minus 38.28. That's this huge move right here. I mean, a massive move was 496 pips. That's it, 496 pips. To show you even more, that, I mean, that's why you just cannot lose using this kind of risk assessment, this kind of stop loss. There's really no reason to put in a trailing stop anymore to, you know, lock in profits, because we have the percentage of R to show us when to get out, and there's really no reason to be real prude once you have this kind of money. I mean, when you have 100 grand in your account and you want to make 25 grand, or you're willing to risk 25 grand to lose 25 grand, you have so much room for error that there's no way you could be that wrong. And that's what's beauty, that's what's great about this. So even if you picked right here, which which you wouldn't, there's a great short signal here, which you would have made a bunch of money on, and there's nothing but a long here. I mean, that's how it's great about this system. There's nothing that would say go short here. Even if you went short here and it moved all the way up here against you, you would have lost 496 pips. That's it. That gives you 2,000 more pips to go against you, which is not going to happen. So I hope that kind of explains a little bit, you know, how it works and all that. But basically, you can enter whatever you want. It's like your account balance is 25. We'll say this is, you know, what do we call it, $18,500. Okay. So you'd look at this. You'd say, I'm willing to risk 46. That changed the amount there. I'll show you again. 13,000. You put 13,000 in there, and this number is going to change right here. And so with risking 13,000, 25%, 25% of that is 3,250. Let's say 18,500, and you're going to be willing to risk 46. So you say, I'm willing to risk $4,625. You find 4,000. You can find a happy medium, or you could just stick to the round numbers, which I would. And I would round down and say, okay, I'm willing to risk 4 grand to make 4 grand, and that lets me buy an $800,000 lot, or $80 a pip. So there you go. Hope that helps. Okay, and to wrap this video up and end it on a very positive note, which there's been really nothing but positive notes, just want to go over, you know, this is the alert log that I've been keeping, and I've only been doing this for about a little over a week, and you can see it's been very successful. Every alert triggered a positive trade. There were no negative trades, and there's no losses at all. The only negative side of this whole thing is that sometimes it takes 3 days, like you can see here, and you know, the rest of the time it just takes a couple. So something we figured out on Friday, we wanted to figure out, using this new exit strategy of the percentage of R, how much more accurate we get. And this one was the very first one. It lasted 3 days. We made 367 pips. We missed 67 of them. It was 81%